We are getting those stress tests across Wall Street today as well. It feels like we're paying extra attention after the banking turmoil than we traditionally have. What can we expect to hear from those?
Yeah, the interesting thing here is there's an expectation of higher capital requirements anyways. I mean, you look at Barclays and Wall Street estimates really just largely here about the capital return plans for the banks. We watch the stress tests, but we also watch the capital return plans on the heels of these stress tests. The expectation is that across the biggest banks, that is going to be reduced by about 8% gritty. And you see the biggest reduction at the big investment banks, Goldman Sachs, Morgan Stanley, for example. There's also a big concern here that it's not just the biggest U.S. banks that are going to be facing tighter capital rules. There's an expectation and concern here that the mid-sized banks here will not only face, kind of a broader array of banks facing these stress tests in the future, but the regional banks here will be very capital constrained moving forward. So a lot of reading the tea leaves coming out of this set of stress tests when we watch how these banks fare, particularly those mid-sized banks where people are very concerned about the capacity to lend into this cycle.